Hello traders and future traders, welcome back to my channel. This is Wells Matera, your Forex Bootcamp trainer. Welcome to my channel. If you haven't subscribed to the channel, please do so and hit the bell button. That way you get notifications of future videos. Today we're going to do something a little bit different. I'm going to ask Chat GBT this question that I put on here to see what kind of answers we're going to get from Chat GBT. So I'm already a successful Forex trader, but I wanted to ask Chat GBT, what does one have to learn to become a successful Forex trader? Maybe we can get some pointers because Chat GBT, if you guys haven't already tapped into Chat GBT or asked Chat GBT questions, I would definitely encourage you to do so, especially in the niche that we're in right now. We're learning how to become successful Forex traders. So let's see what Chat GBT has to say on this question. There's other questions I want to ask it, but we're gonna use Chat GBT as a tutor, so to speak, and let's see what it says. All right, so I'm going to read the answer to you. Becoming a successful, consistent, profitable Forex trader isn't about one single skill. It's a full framework of knowledge, discipline, and execution. Below is an exact roadmap you need to master. So we're going to have some fun and read this together, or I'll read this to you. And it's true what it says. I mean, everything that I've read so far is absolutely true. You do have to have a framework of knowledge. You most definitely have to have discipline. It's going to really test you on that. And then you're going to have to learn how to execute your trades according to what you see in the market. Okay? So execution is important. What must you learn to become a profitable Forex trader? Number one, market fundamentals. That's your core knowledge. You must understand what Forex is and how currency pairs work. Okay? Because you guys already know that currency pairs are foreign exchange currency, or money, if you will, as if you were traveling to another country and you exchange your current nation's dollar to that currency and that visiting nation that you traveled to. So, for example, I'm in the US. If I want to go to Mexico, I need to exchange my American dollar into pesos. And there's an exchange fee that I have to pay to do so. So you have to understand, okay, currency pairs and how it works. So major and minor versus exotic pairs, there's a lot of different pairs to trade with. So you got to understand a lot of that information there. You have to understand pips, like what is a pip, what is the lot size, leverage, margin, spreads. All of that is important. So write that down in your notes. Sessions. London session, New York session, Asian session. So you have to ask yourself, okay, what session am I going to trade? Am I going to trade the London session? And what times can I trade in the London session? The New York session and the Asian session. The Lily cycles and when not to trade. That's really important as well. Because sometimes you'll take a look at the chart and you try to force a trade. You shouldn't force a trade whatsoever. If there's nothing, according to your trading plan, if there's nothing there in the charts that would warrant you to enter the market, do not place a trade. You have to also understand news impacts, NFP, CPI, FOMC, etc. All that information is announced on a weekly, monthly basis, or even daily basis. So you're going to need to go to Forex Factory to understand when that new information comes out. So without this foundation, nothing else sticks. So this is the laying down the submit part of your career. So you have to understand that this part right here, everything I just read to you, is important to build a solid foundation and becoming a profitable Forex trader. So far it's on point. So let's take a look. Do a deeper dive. Price action mastery. Let's read that. The charts is your language. You must learn market structure. What are high highs, higher lows, lower highs. I talk a lot about that. I talk about that a lot in my videos. Order blocks, OBs. What is an order block? How do you find an order block? How do you trade off an order block? That's important. Supply and demand zones. You need to learn that. Where are supply zones? Where are the demand zones? Okay. Break of structure. Definitely need to learn that. Fair value gaps. Liquidity. Equal highs, lows, inducements, sweeps. Indicators follow price. Price leads the market. Okay. So definitely write that down in your notes. So we're going to touch on all of that information going forward. So I'm going to use this as a springboard to start sharing more videos with you guys on my channel. Okay. Because you do need to understand what is market structure. Okay. What is an order block? Supply and demand. Break of structure. Fair value gap. Liquidity. Okay. Number 3. One proven trading strategy. Profitable traders do not use 10 strategies. You need one setup that you master like a sniper. For example, ICT style liquidity mode, break and retest strategy, supply and demand condition, London session breakout, New York session reversal. Okay, all of that are strategies. What matters is you have to have clear rules, exact entry models, exit rules, and risk management framework. Most importantly, risk management. Because if you can master risk management, you can master everything else. Because managing your money is the most important thing that you'll ever do when trading the market. Risk and money management. This determines if you stay in the game. Like I said, the most important. You must learn why to risk only 0.5% to 2% per trade. Position sizing, stop loss placement, drawdown control, risk to reward, R&R mastery, account growth formulas, scaling, compounding versus static lots. Most beginners fail because they're risking like gamblers. Number 5, trading psychology. Your mindset is 70% of the game. Master discipline, patience, emotional control, fear versus greed, removing revenge trading, following rules, even when you feel like breaking them. A trader can have a perfect strategy and still lose if they lack emotional control. Number 6, backtesting and journaling. Consistent profitability comes from data. You must backtest your strategy on past charts, forward test and demo, track wins, losses, RR, which is risk and reward, setups, identify patterns in your performance, adjust your system based on data, not feelings. Your journal is your business report. Number 7, trade execution and timing. Great traders don't just know setups. They know when to strike. Learn optimal trading entries, sniper entries, confirmation models, using time and price together, avoiding impulse entries, session timing, and avoid news volatility. Number 8, technical tools and platforms. You need to be comfortable with TradingView. These are all trading platforms. MetaTrader 4 and 5, setting alerts, using position size calculators, setting stop loss and take profit, reading candlestick types. I talk about that a lot. Using replay mode for backtesting. A daily routine. Profitable traders operate like professionals. Your routine should include pre-market analysis, session, watch list, waiting for your setup only, post-trade journaling, end of week review, weekend markups, and forecasts. Routine equal consistency, consistency equal profitability. And number 10, mindset. Trading is not a hobby, it's a business. Learn to think in probabilities, track monthly equity curves, control emotions, treat losses as business expenses, scale slowly and safely, protect capital at all costs. So not bad. Okay, so and then in conclusion, if you follow the roadmap, you will become profitable. Most beginners skip psychology, risk management, journaling, consistent strategy, and routine. So these are the things you want to incorporate in your trading, and that's why they fail. But if you master price action, risk, psychology, execution, review, and improvement, you will inevitably become a profitable trader. That's pretty good. I like what Chat GBT has responded based on my question here. So if you scroll back to the top, okay, number 1, let's go over what Forex is, how currency pairs work. Well, I did give you an example about traveling to another country, okay, but I want to dive into the charts now and share with you exactly what it meant by understanding your technicals. Technical analysis is important. So let's go into the charts and let's do a breakdown of what you see in the market, okay? Because what I had to learn is how to decode the chart to make it make sense for me. All right, that way I could, trade my trading plan. Wait for the setups to appear, which is an A1 setup, and then once the setup starts to appear, prepare myself to execute or enter the trade based on certain confluences and certain candlesticks. So it's important. So everything you see on this chart are candlesticks. Okay. Now, for myself, and you might want to incorporate this for yourself, is to do a top-down analysis. A top-down analysis is all about starting with the higher time frames. I normally start with the weekly. So let's go ahead and click on the weekly time frame. Now, weekly time frame, every candle is 1 week in duration. Okay, so you could take a look to see what's going on in the market based on trends. Okay, so you have to ask yourself, okay, is the market in an uptrend? Is the market in a downtrend? Where did the market close last week? Did the market close bullish? Did the market close bearish? Okay, and these are the candles that we're going to be focusing on. So all about price action, and we want to trade with the trend, not against the trend. So try to avoid counter trading the trend, okay? Because it's better to ride the wave than to swim up a wave, as you can imagine. Because when you swim up a wave, you have a lot of pressure pushing you backward. But if you ride the wave down, you can actually enjoy it more so, because it's going to take you all the way to the seashore, right? So let's focus our trading strategy, if you will, or psychology, if you will, just like a surfer would, treat the waves of an ocean. Okay, so you're going to swim out with your board, You're going to hang out at a shallow area of the ocean, and you're going to wait for the wave to carry you to the shore. Okay? There's a lot that goes into that. So if you live in California and you are a surfer, you can comment below to add some input on what goes on in the psychology of a surfer. What do they think about when they trying to catch a wave, if you will. But as a trader, we need to do the same thing. I look at the market as waves as well. This is an up wave. This is a down wave, right? Up, down. Michael goes in cycles, and it trades an up wave. It also trades in a down wave. And we call those waves trends. So we have an uptrend here, a downtrend here. Okay, uptrend, then sideways trend, which we call consolidation, where there's really nothing happening there. Then we try to, focus on these little candlesticks that we see in between every wave or every trend. And typically there's a candle that tells you that the trend will reverse. And those are the candles that you need to pay attention to. They're normally called doji candles. They either happen at the top or they can happen at the bottom. And they're usually candles that are very indecisive, meaning the buyers and the sellers are pushing each other and creating, a point in time where one side can dominate the other. So that's what these doji candles are. And then you have to understand what these hammer candles signify as well as the shooting stars, things of that nature. Okay, candles that are all at the top that produce a black candle right after. The Candlestick Bible book is really important. I definitely encourage you guys to read that more than once. Okay, so let's take a look at what's going on. This is Euro versus the US dollar. Okay, so right now, the candle, last week's candle was bullish. Okay, blue means bullish, black means bearish. So the bulls are always fighting with the bears to take over the market. Bulls, when writing a black candle down, you can make money because you've determined that the bulls have taken over and they're pushing the market down. But all of a sudden, the bears step in. It's a reverse. The bears are taking over and pushing the market down and making everybody that's selling the market with this black candle are profiting from a bearish candle. A bullish candle is a blue candle. My color coordination, you can color coordinate anywhere you like. But my color coordination, the blue candle, is taking over, pushing up, causing everybody who is buying in this blue candle, they're actually making money when it goes up. So you're going to buy low, sell high. That is the rule of thumb. So the question is, how can you catch a bull run? Or how can you catch a bear run? Okay. All right. We catch these runs based on trends. We look at what the market is doing. We have to decide whether this market is an uptrend or a downtrend. Okay. Now, looking at this, okay, we look for two candles on the bottom. We call them a double bottom. And if we can find a double bottom, we'll put a line underneath it. This is a double bottom right here. These two candles are exactly the same, so it's a double bottom. And then we stretch our trend line from the double bottom to the top. Taking it from this candle, and we stretch it up. and allowing at least 1, 2, 3, 4, a couple of touches, right? You got a couple of touches. I normally look for 2 to 3 touches. So we got a couple of touches of the market actually trading off this line, which was an uptrend. Okay, and then what candle develops? This candle right here develops, which is a hammer, and it's below the trend line. And hammer normally means reversal. Please write that down on your notes. Hammers mean reversal. But we don't have a break in structure yet, meaning that whenever you have a top, okay, you want to go to the last candle on the left side. Okay, the last 2 candles on the left side, which is this bearish candle and this bearish candle. I would mark those 2 candles with a horizontal ray and put it right underneath that bearish candle, and then this one's right underneath this bearish candle. Okay, and that's right after the high of the market, because this is the high of the market. So you go left, you look left, and you mark the last 2 bearish candles right underneath. You put a line underneath those 2 candles. So what you're actually doing is telling yourself, if the market reverses and closes below either this candle or this candle, I'm talking about a candle that has closed below those levels, then you have a market structure shift. You could be mindful that the market's going to be switching, okay, from an uptrend to a downtrend. All right, it could be a mini reversal, which can be called a pullback. Okay, but if it does not fall between these 2 bearish lines that I put here, then you may have a continuation of an uptrend. Okay, so you would pay attention to this to make sure that you're in the right trend. Because right now, the market did not close below the red line, right? Or did it? Let's open it up. See? Here is the red line right underneath that bearish candle on the left, which is this one right here. And since we open it up, look what happened. We have a black candle that closed below this area here. Okay, so whenever you see that, you can anticipate a market structure shift. Okay, so this market was an uptrend, then all of a sudden it reversed, and now it's trending lower. Okay, so now we could put a trend line on the top of this candle, the bottom of these candles, like this. So you want to make sure you get a couple of touches, right? 1, 2, 3 touches in order to make a solid trend line. Alright, so what happened is we had a consolidated event. I'll mark that out for you, which is right here. Consolidated. Okay, so we had a consolidated event right here where the market went sideways. Okay, and a lot of people would look at this and say, hey, it's a consolidated event. I will trade on the breakout. So, meaning if the market comes out of the box, I'll anticipate trading the market on a breakout. But be very, very careful on breakouts. A breakout there's three things in a breakout: accumulation, manipulation, where the market will come out of the box a little bit, and then the distribution and goes the opposite direction. So this could be one of those scenarios where the market created a consolidated event, came out of the box for manipulation, and then goes back up, causing it, a distribution. But what we need to focus on right now is this blue candle is actually coming back to retest this trend line that we placed right here. And if another candle develops next week and it starts pushing downward, then you have your reversal. You have a true reversal. Excuse me, market structure shift from a uptrend to a downtrend. Okay? Because if this candle continues to, go up, then that's your distribution. Remember what I just said. Accumulation accumulates in the box. Distribution comes out of the box a little bit, fakes everybody out thinking it's going to go lower, and then accumulation, manipulation, then distribution. Okay, there's all strategy behind that. All right, so let me grab this here. So this candle pushes up inside the box. Okay, it may come out of the box, touch the box, and continue its journey higher. That's one option. Second option. See, trading is all about probabilities. If you like math, if you like numbers, you can try to predict what the market's trying to do going forward. So this is the second probable way the actual market can head towards, where it came down, retouched the box, and then come back down to create a lower level underneath this candle. Okay, because the target would be this candle here. Okay, because it'll break. If it breaks through this, you truly have what I call a market structure shift, because the market would go back up here and down, tread lower. Okay, so those are the two predictions I predict for the euro dollar versus the United States dollar for next week's prediction. Okay, I'll screenshot this. I'll download the image, and we'll do a recap next week to see what happened Sunday at the open for the whole week, and see what the next candle would be. Would it be a bearish candle, or will it be a bullish candle? So we'll do a recap on that next week. Okay, I'll make a note for myself. All right, so that's my prediction for this particular currency pair. All right, now, so that's the weekly prediction. So typically, after doing all of this and marking up your chart on the weekly chart, you could always go down to the lower, time frames to see what you marked up makes sense. So we started with the weekly. I'm going to take this off here. And let's leave it, see what it does. Go down to the daily. Okay, and as you can see in the daily, we truly have a couple of things going on here. Okay, I don't know if you guys see the same thing, but you'll train your eye on this. Going forward, I see a head and shoulders candle right here. Head and shoulders candles basically means reversal. So if you don't know what a head and shoulders is, you definitely need to study what a head and shoulders candle or pattern is. That's head and shoulders right there. Okay, which causes reversal, as you can see, bouncing off that trend line. Okay. Now, if we have the trend line here, you guys can also do a double trend line. That's another thing you can do. Clone that trend line and put it right underneath and see if it will follow the pattern. Kind of like what I've put on here for the weekly. So if we were to adjust the pattern, that would be something, wouldn't it? Let's take a look. This is almost like I just foretold the future here, but you never know what may happen. I don't know what's going. The market has a mind of its own. So as you can see, it's trending off the trend line, and it may continue to do that pattern that you see there, which is these M patterns. Okay, M patterns within. So you have this that may occur next week. I would definitely leave the bottom trend line on here as well, because as you can see, it's actually bouncing off of that pretty nicely. Okay, based on this head and shoulders pattern. All right, so going down to the lower time frames. Well, before we do that, let's take a look at the candles that we see here. Remember, this is a daily. So the market's going up here, then you see a doji candle right there. So what happens when you see a doji? Reversal. So this candle here, okay, almost looks like a hammer, right? So I would anticipate a reversal based on the candle. This candle telling me that, this particular doji candle is telling me that, get ready for a reversal. That's what a doji is. It's a reversal candle. Okay. Then we go down to the 4 hour. And what do we see in the 4 hour? Okay, we see a hammer. Okay. And what do we see in the 1 hour? We see 2 black candles, which is developing into a continuation of a downtrend. Okay. And we go down to the 15-minute. Okay. It continues to trend lower. And there you go. There's another trend line on the 15-minute that you can put on for yourself. And you could say, okay. There you go. And then the 5-minute, if you want to execute a trade in the 5-minute, you would wait for the market to reach, okay, a fair value gap, okay, and or an order block. So let's try to find a fair value gap in an order block on the 4 hour time frame. Okay, because we could look for it in the daily, but you can find it more so on the 4 hour. So where is the fair value gap on the 4 hour time frame? Well, remember I mentioned in my previous video, gaps are pretty much 3 candles with the first candle and the third candle's wick not touching, the middle candle separating the two. We call that a fair value gap. So when you find a fair value gap, you mark it and make a box. Okay. And then what the market has to do is got to come back and touch the box to trend higher, bounce off the box. So this fair value gap has been mitigated, meaning it's been filled, even though there's a little wick that's inside of it. But as you can see, since we're anticipating this candle to be a hammer, right, there's an opportunity for it to come back and fill the gap as well, to complete filling that gap. Maybe going through the gap, going back and retouching the gap to go back down to this opposite trend line that we put on our charts. That's one option. Okay. Right. It's always about probability. So another probability touches the gap, bounces off, goes above your trend line, and continues journey going up. So there's another probable option. All right, so basically that's what you see here, and that's pretty much it's as simple as it gets. Okay, so remember to always place your trades if you're in an uptrend. Okay, if you're trading an uptrend, you always place your trades on the bottom. Okay. These are all the places I will place my trade if I'm in an uptrend. And then exit at the top. All right. When placing a trade on a downtrend, let's say you identify this downtrend right here, which is the reversal. Okay. It's going up. But now you want to trade this downtrend, right? All these areas, excuse me. All these areas I'm placing here is where you want to place your trades on a downtrend. Okay. Meaning you wait for the trend to, if you miss it here, you wait for the retracement. If you miss this one, you wait for the retracement. If you miss this one, you wait for the retracement. Okay? And that's how you place a trade. But analyzing this right here, if you want to do a quick back test on the strategy, let me show you exactly what it looks like. Okay? Okay, so this is a 1 hour time frame. We notice, and I'm going to go ahead and do a replay for it. Okay, right here. We notice this uptrend. All right, I'll show you. We notice this uptrend. This is an uptrend. All right, we mark it like this. This is a complete uptrend, right? We have one touch here, a couple of touches. Okay, this is an uptrend. If you see this in the market, it's too late, right? It's too late to get into a trade. You just want to wait because the market's at its high. This golden line, dotted lines, is a high of the day, right? So you just stepped in, you're about to get into your session, trading session, and you see this, all right? Now you have to say to yourself, okay, I'm going to be patient. That's the first thing you have to say to yourself. I'm going to be patient. And I'm going to wait for a reversal, a market structure shift for the downside. I'm waiting for a downtrend. Okay? Now, why are you waiting for a downtrend? Well, You go all the way up to the top. And what candle you see here? You see a reversal candle at the top, which is telling you it's coming. Okay, so you're patient. You know it hit the high. You're patient, and now you're gonna start waiting for a reversal. Let's push play. All right. So what is gonna give us a sign that the market has shifted? Okay. Well, we're gonna put a couple of lines here. Horizontal raise. We're waiting for a downtrend, right? So we're going to put the last two candles that are bearish candles. We're going to put a line underneath them. Okay. So if any one of these candles close below these lines, we can anticipate a market structure shift. And what happened? Right here, this candle closed below this candle. Okay? So now we have our first confluence that the market wants to change. Well, second confluence. This is the first. This is the second. Now we have a bearish engulfing candle. So first sign, second sign, third sign. Okay. And it repeats itself again. First sign, bearish. Second sign, another sign, bearish. So 1, 2. First sign, second sign. There's a hammer. There's another doji. 1 sign, 2 signs. 3 signs. Reversal, doji. Another sign, 4. Hammer. Then it tries to fake you out, right? Okay. And this is where I will show you, right here, is where I will show you consolidation, right there. See consolidation, which is accumulation. Okay. Then accumulation, manipulation, because now it's coming out of the box. And then you have distribution. So it happens a lot. Accumulation, manipulation, distribution. It's all right there. Okay. So let me erase that. All right. So, but now it closed below your target here. Right? Below your candle on the left side. So now all we got to do is wait for a pullback and then wait for the market to come down a little. So let's push play. Okay. And what do we have? We have this being violated, meaning it closed below with this candle. And now we have another candle, this candle right here, below this candle right here. Now that's a confirmation that the market has shifted. Okay, confirmation that we're no longer bullish and it's below your trend line. Remember the trend line that you placed. It's below your trend line, and it came back and touched the trend line almost, gave us a bearish engulfing candle, and now it's continuing its journey lower. So when you see this, okay, you would place your trade. You would enter for a short position. I would say right when you see this retrace, you would enter there. You would place your stop loss above this area here. And you try to stretch it all the way down to the next golden dotted line. Let's push play. And that's like for a 1 to 3. Bam. And there you go. The market actually hit your take profit right there with this candle. So for 1 to 3.72, you would have profited if you had invested or traded $100, risked $100, you would have made $300 for 1 to 3. Risked $1,000, you would have made $3,000 for 1 to 3. Plus a little bit, some change on top of that. But that's how you actually mark up your charts. Now, keep it simple. Keep it simple. If you're patient and you know what to look for in the candles, you can do what I just did. That's going to require you to understand yourself. It's going to require you to read the Candlestick Bible. It's going to require you to understand trends, understand what the market structure shift is, okay? Because when it pulled back, okay, it actually pulled back in this area here is what we call either an order block, you can call it an order block, or fair value gap, okay? But I would definitely call it an order block. But there is a fair value gap here, and that's right there. Almost didn't touch it at all, but it did come into the order block. So if I was to point that out to you, these 3 candles, 1, 2, 3, this wick and this wick, as you can see right there, did not touch. Make it bigger so you can see it. This wick and this wick did not touch, separated by a bearish candle. So we would mark that up as a fair value gap. And this candle came up to try to touch it, but it didn't. It did touch, though, the order block, which is right here. Alright, and that's another conversation in itself. I gotta teach you guys how to find order blocks. Usually they're on the top. This would be an order block. This would be an order block. But this is a perfect trade. This is what we call an A1 setup. Okay. So again, rewind the video, pause the video, make notes, see what I just did, replay, repeat, re-rinse. Do this every single time you see a market structure shift. Okay? When the market can't make any more highs, it'll tend to reverse, okay, and go back down to fill any gaps that you might see on the left side. Because before we do our trend line, we noticed that on the left side was a bullish trend, right? But if you take a look at this bullish trend, you'll notice some fair value gaps. There's one here. This candle didn't touch. So this is a fair value gap right here. You can stretch it all the way out to the right. there a fair value gap here? You guys see it. I don't have to show it to you. You see it. You'd already trained your eye. You're a professional. You're a pro. Here's a fair value gap. This candle, this candle. That's a fair value gap. There's another one. So your homework assignment is to find fair value gaps. Those are all fair value gaps. Because all these candles are touching this they're all touching the wicks. There's no gaps. There's no gaps. All the wicks are touching. Okay? Except for this one here. But it's already been filled. With these two candles, I filled that gap. Okay. Now, what's happening? As you can see, it's heading towards those gaps to fill those gaps. So if you know where the gaps are, you could have successful trades because the market has to come back and fill those gaps. We just don't know what time, what day, what week, but it has to come back and fill these gaps. Okay? So that's your homework assignment. Find fair value gaps. Okay? Next week, I'm going to talk about indicators because I didn't really use not one indicator. This was all based on a book that I read called The Naked Forex. And in that book, it doesn't talk about using indicators at all. I didn't use that one indicator. All I used was my trend line and support levels, if you want to call them support levels. Okay. Or lines that I put below my black candles on the left side. And I just was patient enough to say, if the market goes below the two red lines that I placed, then I'm looking for a market structure shift. I'm looking for a reversal. And sure enough, we got a 3-to-1, or 1-to-3, or 1-to-3.72. A winning trade right here. All right, y'all. That's all I have for you today. Thank you so much for watching. Don't forget to give a thumbs up. Share the video with your colleagues, your friends, your family members, your neighbors. Okay, find 3 of your friends. Ask them to learn this with you. That way you guys could bounce off ideas, strategies, and you can change your lives together. Join my academy on my website, metrofx.com. Here it is. metrofxtraders.com. Okay. Go to this website. There's a lot of tools here. Okay. You can grab your charting platform, just TradingView. They're having an 80% Black Friday deal. Get your trading platform where you can chart up your charts. Okay, they're having an 80% Black Friday deal right now. Okay, off my site. Okay, you can find a broker. You can open up a demo account. You can open up a live account. You can join the academy by clicking this button right here. You can hire me. I drop my mentorship fee down to $495, but there's a November promotion, which is $100 off. So it's $395 if you want me to mentor you, hold your hand, give you a curriculum, a step-by-step guide. We're going to go off Chat GBT and follow what Chat GBT has to say, so we can teach you right, so you can learn a skill set that can make you a profitable trader in the next couple of months, years, weeks, however long it takes you to learn this craft. You can learn it, you can do it, and just practice and apply what you learn, and then attack the market with a trading plan, with a blueprint, if you will. That way you're not going in blindly. Okay, because 90% of the people, based on what ChatGPT said, 90% of the people, if we go back to this, 90% of the people They fail because they skip how to manage their psychology, how to manage their money through risk management. They don't journal. They don't write notes. Okay. No consistent strategy, and there's no routine. Okay. But if you could master price action, you could master risk, psychology, where to execute your trade through execution, and then you do a review, and then you improve on your mistakes on your review. If you can master this, there's no reason why you can't become a successful, profitable Forex trader. Okay, now everything has risk. Don't risk money you would use to pay your rent, your car note, things like that. No, don't do that. Just whenever you have excess cash and you want to use that cash and trade it, first start off with a demo account before you go live. Okay, or you can use a prop firm to lend you some cash and trade that and then split the profit with the prop firm. Okay, so recap of my prop firm journey. Pretty much all the accounts I had last week that I showcased and shared with you guys, I failed each and every one of them. So I have 2 left. I went ahead and purchased 2 more prop firm accounts. I have 2 more left that I'm going to be trading, and I'll give you a recap on that next week. One's already in profit, about $200. The other one's in profit, about $15. And they're both $15,000 accounts. So I'll showcase and share that with you guys next week. So I'll give you a progress report on that. I also opened up 2 live accounts for myself through copy trading. If you guys don't know about copy trading, I'll be teaching you guys what copy trading is all about, where you could trade one account and the second account copies the trades that you place on the first account. The goal with copy trading is to become so profitable that when you trade one account and you have 20 accounts copying that one account, then when you make $1,000 in one account, you'll also make $1,000 in 20 accounts. So that'd be $21,000 you can earn based on copy trading. That's another strategy in itself. I'll be teaching you guys that strategy in a couple of weeks. So plug in to the channel, stay tuned, hit the bell button. That way you get notification when I start trading on that. Okay, so I have 2 live accounts. I'll be showcasing and sharing those accounts with you guys as well. One account's already in profit. The other account, I'm just waiting for it to get funded. And I funded those accounts with the money that I earned through one prop firm. I was able to take some of that money and fund one account. And now I'm trading one account. And I have another account that I funded with real live money. And I'm having that account copy my primary live account. And I'll be giving you guys some stats and reports on that as well to showcase and share with you exactly how well, how poorly I'm doing with those accounts. I'm learning every single day as well. My journey is not over. My journey ends when I'm actually so profitable that I'm able to live the lifestyle that I want to live, which will include giving to, charitable, making charitable contributions to charities that I definitely want to give money to. Also giving back to my community, also giving back to my family, also preparing a trust. That way the trust funds my lifestyle, not only my immediate family, but my extended family as well. I'm talking about cousins, nephews, things of that nature, nieces. And lifestyle will include just, not clocking in on 9 to 5, but living my life the way I want to live it without answering to a business or corporation or an employer, but living the lifestyle that is a humble one, not so much gaudy or extravagant. I'm not interested in all that. I'll have my luxuries, but I'm not going to spend a lot of money on jewelry. I don't like jewelry, so that's not going to happen. But I will start investing in real estate. I will start creating investment accounts in stocks, creating multiple annuity funds, investing in do some you know, invest in other businesses through venture capitalists, lend my money out to businesses that I deemed to be, looking that has a successful business plan. I'll lend the money and maybe do a joint partnership with other businesses and live through residual income or passive income, meaning real estate income, passive income from other businesses, and then just using that money to buy my luxury items. I mean, I do want a luxury car, I want to buy a home, I want to eliminate all my debt so I can live the lifestyle I've always wanted to live and travel without a suitcase. That's always been a dream of mine. Travel without a suitcase, meaning get on the plane, first class, right? A chartered plane that I rent out once a year. Get on a plane without luggage, getting to my destination, whether it's a Caribbean island or European travel, whatever. I'll decide on those destinations when I get the money. But going to those destinations without luggage and buying what I need to buy when I get there. I'm talking about, outfits, shoes, a toothbrush, things of that nature. That way I'm not going through baggage checks and all that other stuff. I'm not interested. Just want to get on a plane, get off the plane, go to the hotel, order me a couple of suits, dinner suit, dinner jacket, set my reservations, get with my tour guide to visit where I'm visiting, and, tour museums, and just having a ball doing that. And then I'll even probably become a true YouTuber and start recording those events. That way you can see the progression going forward. So I look forward to learning how to, use cameras and then editing those cameras and give you that kind of content that way you guys can be inspired as well. All right, so stay tuned for that. Me visiting dealerships, visiting my dream car, sitting in my dream car, and eventually paying cash for my dream car. Stay tuned. All right, so with that being said, thank you so much for listening, watching, learning. Come back next week so we can do it again. Take care, everybody. Much success to you, and keep studying. You can do it. Take care. Bye-bye.